Hi and welcome to the Market Alert for Thursday, the 27th of May 2021. So yesterday, small cap surge amid a massive short squeeze. The dollar puts in a dead cat bounce. Let's have a look to spot the odd one out. Brilliant. So it's the bounce in the dollar, obviously, and the dead cat. So let's have a look at other news. The implied volatility putting in a new low. We've not seen 1327 for some time. I meant to mark up this low here. I can't remember what it was, but it was somewhere in this sort of area. But certainly a bit of a downtrend going on there as we head out of May. We didn't get the correction that we thought we'd normally get. The sell in May go away. That didn't materialize just yet, but then I have seen it delayed a month and it happens in June. So again, don't write it off yet because the markets are still sitting in those all-time highs. What have we got here for news today? Just 1:30, we've got the prelim GDP. That will be interesting. 6.5%. Wow. Unemployment claims as well at 1:30, and then we've got pending home sales. The housing market's on fire as well in the US at the moment for all-time highs, and again is giving concern to the Fed apparently, and looking towards tapering. So again, that's come up. We've gone from inflation now, hyperinflation, to tapering. It's amazing how these things change week by week and what becomes the dominant news. So let's have a look at the Dow, see where this traded yesterday. I think this is the Dow. It is the Dow. This is the daily chart. And you can see prices currently weakish overnight, trading down to the 20-bar moving average. Yesterday, inside of the range of Tuesday's bar. As well, that 62% retracement still giving this market some grief, as well as this resistance here. It's starting to look a bit on the weak side, isn't it? So what I'm going to do here, just in case we start moving to the downside, from this low to this high, is going to draw in these here, and there's a set of fibs there for the downside targets. Should prices, the most important thing, take out the 20-bar moving average for this market. But yesterday, if we have a quick look at the price action for yesterday in the 5-minute chart, you can see that the classic sell-off of the Dow, then the bounce, you can see up to the 200 MA, and then the bounce back to the 200 MA, then the bounce back to the 200 MA, and you can see this happening all the way through until we have this big bar here, and then the market trading back down to where it was after the open. And then overnight, price is finding a bit of support down at the S1. And most importantly, at yesterday's low, it needs to hold this level. Failure to do so will send prices to the downside. In the German DAX, we're off that all-time high. And as I said on Tuesday, the market... the all-time high was on Monday, and then they put in another all-time high in the futures on Tuesday. Once you've got this, the market tends to pull back for a few days, and that's what we're seeing. The market's currently below the 5-bar moving average as well. So again, I'm going to draw in some downside fibs from this low to this high, just to see where we are with some sort of downside targets there. So 38 being the first one. There's an interesting one at 50. I know 50 isn't a fib level, but it also ties in with the 20-bar moving average, where the market likes to drag it back as quickly as possible or hold it at this level. So a very important level there at 15,282 should prices move lower. However, if they move to the upside, I'm just going to remove this one here. We can actually draw in from this high to yesterday's low to give us an indication of what we could expect on the upside as well. So let's just draw this in. And again, I was going to remove a few of these, but I'm not going to. 89 is going to be the crucial one, or 78, 89. These two here, should the market move high. The market failing to close through 89 in the daily chart is a very good indicator that there is a correction coming. And also what's fascinating here as well is that if we go back to the Dow, to the daily, you'll see that we're nowhere near the high in the Dow. It's as if it's just run out of steam and just managing to hold at the moment, but looking sort of weakish. I do have the two upside targets there just in case, but you can see that the velocity in the momentum in the DAX at the moment, having just put this all-time high in, is amazing. It looks a bit stronger than the Dow at the moment. Let's have a look at yesterday. The market kicked off in the morning with the futures market moving down to the previous day's close. We ended up with a 78-89% retracement, with prices then moving back just before the cash opened, and then back to the DP, through the DP, straight back, really volatile. Selling pressure, selling coming into the market, further selling coming into the market, back to the DP. Market closes below the DP, and then we see prices moving lower. We see consolidation here, and then we get the test to the downside. But then the market didn't do a lot. It remained sideways until eventually, as you'll see there, it broke once more to the downside, then coiled, and then really didn't do a lot. It just got stuck in these sideways ranges once it had broken yesterday, which you can see there. So more of a stepping down effect. And then through the morning doing exactly the same thing as each time that it broke at a level, bit of a bounce. There's more of a downtrend, an uptrend, and then down. And probably the biggest movement we had coming back after sitting through the morning session with nothing really going on. So mid-morning towards the afternoon session, prices then rallying a bit, and then the DAX following the Dow, putting in a straight reversal there, and trading back to the resistance here before moving back, and then just trading sideways just as the Dow did. Managed to get back to the low, but couldn't break it or stay above it. So prices then managing to get back above this as it went into the evening session, and then overnight we can see that prices are stuck at yesterday's close for a while in the 200 MA. Which we can see here. This has become a resistance for the market. Even if it's bounced back to it, it's then moved lower. See a bit of a cluster here of volume. Prices trading sideways. You've got a support coming in there at 89%, with prices then moving back to the 200 MA, managing to get through so far. But again, you can see how it's come back on these two occasions. But currently below it, but we've got some buying pressure coming into the market there at the moment for the DAX. We'll see what happens when the market opens. In fact, let's have a look at the 30-minute chart, and we can see what we've got overnight at the moment. Yesterday you can see that it was just continuous in the 30-minute all the way down. That was the rally back mid-morning, mid to late morning, then the Dow opening, and then prices just stuck in that range again. But amazing how the 30-minute it comes back to these areas. This will be, if it's not at a pivot or a psychological level, it'll be at a Fibonacci level, the same as from there to there as well. So the market has the low here, which is only 50 points. And the reason I'm mentioning this, of course, is because if the Dow futures electronic session opens and moves lower, let me just grab the 5-minute charts because we're already at the low. So if we go through the low in the in the Dow, then we're likely to attack this area in the DAX as well. So, and again, that ties in with this low for yesterday, and that's another reason why I'm just using the 30-minute chart. But if we go back to the 2-minute, again, you'll see exactly the same thing. It's just easier to see on the 30-minute. You can just step back and have a look. But there you go. You can see inside the detail down to that down to the low, and then the S1 there as well, and then S2 below that. Interestingly enough, the high as well is not too far away. That's 100 points to the upside. The low is only 50 points to the downside. So I wouldn't be at all surprised if we don't see an attack on this first myself during this morning's trading session. Quick look at the metals and the dollar. We'll start off with silver. Down day yesterday for silver, coming back to that 27.50 overnight as well. Just show you that. So in the 5-minute, you can see overnight that they came in and hammered the market. They then brought it back to the low of yesterday and then brought it back to 89%. Just show you this from this low to here. You can see the market sitting at the 89. There was some selling in this bar. The selling disappeared in the next bar, and then we're back above the 5-bar moving average, which is why the bars turn green in this, not the 20. And prices are now moving to the upside once more. Now, the US dollar yesterday had a bit of a dead cat bounce and started to move to the upside, but it's low volume and now is starting to reverse. And again, it needs to take out this 89.66 convincingly to move down to 89.16, and that way we will see both the gold and the silver market moving higher. Now in gold yesterday, different picture to silver. Silver was moved to the downside, more like that, whereas gold has managed to hold, reversing on the overnight, and needs to take out this high of yesterday, which is $1,912. So yesterday you can see what happened here. Psychological level of $1,900. Need to take it out so they can move prices higher. Okay, I think that will do it for today, and let's see what happens with the lows in the Dow and the German DAX when these open at 7 a.m. on the electronic market. Okay, that's it for this one. As ever, thanks for watching. See you in the next.